Oh, hello.
Hello. First of all, welcome back.
Yeah, today I think we are not going to talk about stock because of Mid-Autumn Festival. So we are trying to cover another company.
Yes, this company doesn't make mooncake, doesn't make lantern, but still connected to Mid-Autumn Festival.
I think we wait for the crowd for a little while. Then
So maybe you guys already know. You already. Yep. So Chun how are you going to celebrate Mid-Autumn Festival later?
I think beside mooncake, but this year Mid-Autumn Festival was a special one. I think it's rather not a good one because today's announcement by Hisham. I think there's a lot of rumors talking about whether there will be another lockdown or not, right?
Yep. But I mean, looking at the cases, Malaysia COVID cases has been looking not so great for the past few weeks. The cases has been going back up to 3 digits. So yeah, a bit tough lah. So to our followers, happy Mid-Autumn Festival, 中秋节快乐. Let's hope that today's episode will be short and sweet. Then you can go back to enjoying your mooncake, drinking tea, playing lantern with your friends or with your children. So today's company is a company that if you look at the background there at the slides, they make packaging, plastic packaging, particularly thermal vacuum, hard form plastic packaging. And yeah, you see their products quite often now because mooncake plastic packaging is one of their key packaging products. And yeah, so today we're going to talk about SCGM Berhad. And there is a special pivot that the company has previously tried to enter also due to the COVID-19 pandemic. Company has also been trying to diversifying their business. So let's look at their performances and whether this company can continue to grow for the many years to come or not.
Yeah, let's start.
Okay, so as usual, the always available disclaimer, this is just for educational purposes, does not constitute to a buy or sell call. Do your due diligence if you think the stock is good and do deeper studies before you enter your the stock that you like. So of course, this company is none other than SCGM Bhd. If you don't know what they produce, they produce a lot of products. They produce a lot of kinds of packaging. Some packaging you might not link to them, but nowadays where polystyrene ban is quite enforced in Malaysia, you will see a lot of so-called plastic packaging, but biodegradable, and a lot of them are produced by this company called SCGM. I haven't been in Malaysia for quite some time already to tapao lunch, but Chun nowadays when you go and tapao lunch, do you see a lot of SCGM products that people use?
I think that their recent performance, of course, is driven by something else, but I mean 1 year back is driven by the policy of the enforcement from the government to actually ban the polystyrene-based plastic packaging. So they are the one of the beneficial parties. But I think that there's some jokes after you move from the white color non-transparent polystyrenes, go to this, the biggest problem that everyone will have, I think this is the first world problem. You cannot finish all your rice one. If you tapao your mixed rice, right? There will be some sort of rice stuck inside, and it's very hard to take it out. But I don't know why they design this way. Maybe if I have a chance to talk to the bosses behind SGBM, I definitely ask them why you design it in such a manner. Because since small, my mom always teach me you cannot waste on foods. Every single rice is very important. You must finish all. But with this packaging, it's close to impossible for you to finish it off, if you know what I mean. But aside, I think,
Yeah. I mean, the edges is still sharp, and sometimes you just need a little bit more effort to scoop out the rice compared to polishing where the bottom is more rounded. So if you just thought that SCGM as a company just produce your, take away plastic packaging, you'd be surprised to know that a lot of kind of plastic packaging they do. They don't just do the tapao rice kind of takeaway. They also do plastic cups. They also do the plastic the one that's transparent that people used to pack cake. Those kind of chiffon cake with a hole in the middle, one green color. That one always come in this kind of plastic packaging, and
yes.
then. Of course, over the years, there are more and more better looking cakes, cheesecake, sliced cake, and these kind of cakes, they have a cream on top of them, or the side, every side of it is full of cream. You want to have a packaging that can protect the cake, and you also have the individual slice kind of plastic packaging. And practically a lot of kind of plastic packaging is produced by this company called SCGM Bhd. So, of course, they have also evolved their business. They have also pivoted their business. I think just early this year when the pandemic was ravaging, the company actually thought a very smart move. Since now we are doing packaging, food packaging, is using plastic. Why don't we make something else that is also using plastic? Because at the end of the day, it's not too hard. You just need to do the necessary investment. You still use back your same raw material. And the company also started to make face masks and also face shield packaging as well. Your rice also comes in a plastic bag, very, very hard plastic bag. So a lot of packaging is in plastic. Even your food juice, also come in plastic bottle, your Coca-Cola, Pepsi. And you will ask yourself, why never they come in other kinds of packaging, like paper bag or glass bottles? Or maybe they are this kind of packaging, but sure lose to plastic. But the key reason is because plastic is cheap, and manufacturers will always tend to use plastic because plastic is cheap. And if you look at paper is very easily to tear. When you get wet, it will break easily. And then if you have oily food, also straight away kaput. So paper has weaknesses. Paper packaging has weaknesses. Then we talk about glass bottle. Very strong glass, and can store oil, can store all kinds of wet food, liquid food, or drinks. But if you drop, that's it. Habis, kena pecah. So strong but very bitter. And if the glass product just fall to the ground, then habis. So what to do? Then why don't you use metal can? Metal can also can lah. But metal can, people when buy canned food always look at the canned food. They take and look around. If the can got dented, people put back because not nice, man. So you also have a problem when you use metal can. So what to do? The most ideal way that food manufacturers use to ship out and package their product is in plastic. And SCGM is one of the key plastic packaging players in Malaysia lah. So let's take a look at SCGM's company structure. So basically, it's a very simple company. The listed company is called SCGM Berhad. This is the company share that you can buy every time when you log into your trading account. And under SCGM is Seng Plastic Industries Berhad. So this is the manufacturing company. Basically, SCGM Bhd owns 100% of Lee Soon Sing Plastic Industries, and when you buy into SCGM Bhd shares, you are becoming the indirect owner of Lee Soon Sing Plastic Industries, which is the key manufacturing company inside SCGM Bhd. So straightforward lah. It's not as complicated like the previous tech companies, which has a lot of company subsidiaries. So next we move on to what does Lee Soon Sing Plastic or what does SCGM sell? I mean, Junbeng, take a look and you see the kinds of product that SCGM or Lee Soon Sing produces.
I think it's all the daily stuff that you get. As in you will encounter them. So I think one of the best example is mixed rice, where you use all these packagings. But I think for SCGM, of course, it comes into a long way. They are not a new companies, so they have been in this field for quite long, and then they managed to survive through. I would say it's a very tough arena because the entry for this industry is not that high. If you have capitals, as in you have capital in hands, you can invest, you can build factory, and can go into it easily. So I think, but of course, they are sacrificing quite a bit of market share back then to as in quite a bit of profit to win the market share. And then eventually, when the government policy come out to enforce a new type of the biodegradable packagings, they are the one benefited from it. And then lately, they are very smart into this COVID-19 where they try to ride on it. But then later, when we share the financial performance, we will share our view lah. Because is this the highest they can go already, or is not? Maybe when we go into that slide with more figures and graphs, you guys can see clearly.
So when you talk about a company that produces plastic packaging, and you saw just now, they have been very strong in terms of the types of packaging they offer to the food and beverage business. So if you look at their customer segmentation, which they provided, you can see very stably, food and beverage has been contributing to the major part of their business. So maybe you cannot see the year part, but the one on the right hand side here is year 2020 annual report, where you see the food and beverage contribution is around 169 million ringgit. So upon total revenue of 210 is clearly more than half. It's maybe even I think more than 60% comes from the food and beverage players that is supporting SCGM's main business. Of course, they also do extrusion, which is the semi-finished product. Basically, the extrusion, they can sell it to other food and beverage makers who have the packaging finishing machine at their side. So extrusion is more like the half semi-finished goods, semi-finished raw material to feed to the final packaging material machine that the food and beverage companies may have. And they also produce a small fraction of their plastic is also go to the electronics and medical companies, but it's not a lot. It's just around 14.2 million as of fiscal year 2020. And if you look at the percentage contribution, has been very stable. Food and beverage has always contributed around 70 to 80%. Extrusion 14 to 13%, and electronics is sometimes 12% and as low as 6.7%. So they really rely a lot on the food and beverage companies as for their sales. And next but not least, we look at the major products that they produce. So as we all know that because this company actually appeared at the headlines a lot, I think during the time where face mask was a scarcity around the world, I think we all went through that period where face mask or box, how much was it? 50 ringgit?
I think it's about 80 to 100, sir. It's more than that.
Back then when facial mask was so scarce, where people were queuing up to buy facial masks because during COVID-19, and then there were not a lot of stock. So this company also decided to enter the facial mask production business and also producing the facial shield. But if the government had not come up with the so-called price control measures, maybe the company would have been reporting more spectacular results contributed by the medical protective equipment segment. But I think governments all over the world, they know that this scalping behavior is happening, and they really put a control on the ceiling price. You cannot earn that kind of money to scalp when in this kind of crisis lah. So in 2019, definitely never made anything, but within a quick shift and evolution, they at least managed to get around 4.7 million to contribute to their total overall revenue. So it's still lesser than 2019. 2019, you see food and packaging plastic is 220 million, also came down by 10%. And countries, I would say, quite surprising. I never knew they sell to Africa, they sell to Australia, they sell to North America and South America. I would say quite good, quite positive. 50% local Malaysia sales, and maybe no, it's more still majority Malaysia or Asia. But I think export is 50% and Malaysia is 50%, if my recollection is correct lah. So maybe Choon Beng, if you look at the numbers here, are you happy with this kind of company?
No, I mean, this is sort of like a very traditional industry, and the good side is the management is very responsive to market happening outside, and then they manage to spin something out immediately and then get the revenue put into their pockets. But then if you happen to know them because of COVID and they come up with a face mask, and then you are very interested in them, then probably you want to think twice because ultimately it's just a new revenue stream in the short term, in my opinion, because they are not into these fields like Top Glove has been doing this as their primary source of income. So this is just a spin-off to get some money, and then after the thing's over or the thing slow down or more player coming up, this thing will be out. So what you should really think about is whether this type of biodegradable plastics packagings will be benefited because of COVID that drive a lot of people to work from home, and then with the rise of the food delivery services, will this contribute into their sales in coming years? For this medical protection equipment, I think maybe they will report these figures in 2020. 2021 might be got a little bit, then no more, in my opinion. So if you wanted to invest because of this, you shouldn't take the angle of protection mask, but you should take the angle whether the plastic packaging biodegradable version will be the major player to support the rising food delivery demands in the future or not. This is my opinion. But the rest is good lah. Very diversified, even shipped to Africa's, Australia and so on, which is quite surprised. Same reaction when I see it together with Japan's. But of course, I think FY19's there are some special things that happen. Maybe Japan can share that.
Yeah, I think that's a very good point that you mentioned. I also think that if you want to bet or to really think that SCGM can grow, you should be asking a question whether the company can ride on the maybe increase trend where people would rely more on food delivery, and because food delivery they always will pack in plastic packaging, or most of the time it's going to be plastic packaging. So that would be a very good question for you to think when you want to invest in a company like SCGM Bhd. So we move on to the income statement or the profit and loss. You can see that 2020, their fiscal year 2020 just passed 1 quarter ago, and earlier this week or last week they released their latest fiscal quarter result. But let's look at the 2020 complete result first. You can see that the revenue dropped compared to 2019. If you zoom down to 2019 here, down here, you can see that the company actually made a loss. The company lost 5 million back in 2019, but in year 2020, it suddenly earned 17 million. So you will say, wow, suddenly can jump from -5 to positive 17 million. So that's around 20 million kind of a jump straight away. And if you look at the revenue, do they earn more? Did the business became did the business grow? The business actually didn't grow. From 219 million, it dropped 9 million to 210. So something must happen in the middle for this -5 to jump to 17 million, right? Maybe let's look through. You look at the cost of sales, negative 170, here 195. So there's a major drop from the cost of sale point of view. That's one point. And if you look at other one, other income also increased, but not to the extent to impact and give the 20 million difference between these two. So I think the 20 million straight away you can see is the difference of these two. So the cost of sale actually plays a big part into pivoting a company from loss making to a profit making. If you have a difference of 20 million, others minor difference lah, just 1 million difference, not much difference, and then the taxable income, not much different. So cost of sales actually play a huge role. And when this kind of information or this kind of numbers jump at you, you want to know why cost of sale can suddenly swing so wildly. Does this mean that in year 2021, it can also go back down to negative 200 million? So good question, right? So now you know that the cost of sales can swing widely. Then you have to look at each quarter what happened. So you can see back then in quarter 2, quarter 3, quarter 4, 2019, the profit margin was keep on coming down. And if you read their quarterly report, it was due to because higher operating expense, and the most critical one is raw material. Because to make plastic packaging, you need some derivatives. Plastic comes from somewhere else. And if you are more towards a chemical base, you know that plastic is actually petroleum derivative. So you have your petroleum, and then you do fractionate. The good part becomes your fuel, and then the heavier part or the longer chain parts will be used to make plastic derivatives and plastic products. So if plastic or crude oil goes up, SCGM has no control over their raw material. They also have to buy expensive feed, and then this expensive feed, if they cannot pass it to the customers, then they have to eat the loss themselves. So miraculously, after quarter 4 2019, the profit margin improved 4%, 7.5%, and as of the latest quarter 1 2021 report that they just released, very good, 14.4% net profit margin. So Chun Peng, looking at the inherent risk of the business has, what's your thought?
Yeah, I think when I see this on the quarter one, but I don't think we have another slide on the annual one, right? But if you have the chance to see the annual one, then you'll see it's actually on a shape like this. So it's going down and coming up again. And then you are wondering, if you just zoom into quarterly report, you're wondering, is it because of COVID or because of the biodegradable version of plastic packaging are driving this profit margin to higher? But the answer is no. They has been there before. It's about 12 to 16, I think 5 to 10 years back. And then slowly it goes down, but claimed by the annual report saying it's because of a lot of players come into the markets, and then they wanted to retain the market share, they just slice their profit margins. And they managed to do it. I think it's a good sign, because when this new policy come out, of course, a lot of players want to come in. Because factory is there, you are free to manufacture anything you want. I mean, they won't be just one plastic manufacturing factories, which is SCGM. There are more. But then if they manage to slice their profit margin and retain back the market share, I think this is good sign. But will this thing continue to grow? I mean, on the margin side, I think it's not. I think this probably is the highest already. Maybe you can reach 20, but not beyond that. This is my opinion. But the good sign is the past 10 year the revenue has been growing. So it depends on how you justify the PE or how you justify the thing that they get from a return of stocks. But I think there are a few observation. First is I think their profit margin cannot go beyond 20 because of the nature of the industry. And then when new player come in, they need to slice the profit and then to survive through and retain the market share. And then this has already happened, and they are the survival, in my opinion. Or else the result won't look good already. And then thirdly is the revenue has been going up. This is a good sign. And then lastly, probably when we go into the balance sheet, you know what is their balance sheet profile, and then whether they have good cash flow or not. And then all this will add up whether you're keen to invest into this company or not. But I just hope for one point, don't invest because this guy produces face mask or the shield. It's not going to continue. And it has been reflected in the numbers. It's just 4 out of 200 that they make. And then this should be the highest already.
So yeah, luckily we have the snapshot of the prospects of the analysis part of their latest quarter. So if you can read here, of course the latest quarterly results was quite good. The revenue increased to 15%. And if you look so you say okay, because the latest quarter report, usually quarter report, they don't show that much info compared to annual result. So this latest quarterly report should already cover what business they did back in early the year or back when COVID was starting. So when the company released, I saw the revenue was quite okay. It grew. Profit also satisfactory, but I was more interested to know that, okay, you say you got produce a face mask, you got produce face shield. So if you grow, is it because you sell more face mask or face shield or not? But if you look at the explanation there, they say they grew because able to increase their manpower, so they managed to cut down the cost, and then they recorded a higher profit because due to improved sales mix and lower raising costs and lower interest expense. They never said that the business grew because they managed to sell extraordinary more facial masks or extraordinary more face shield. Face mask and face shield will continue to become an essential item to a company who has producing them, but it will not suddenly turn from a food packaging company to become a PPE company. Maybe the two of them will grow together, but food packaging people will use more compared to PPE if you think COVID will eventually pass by. So after we go through the business, we go through the income statement, good quarter results. 2020, maybe a little bit correction down compared to 2019, but turn from loss-making to profit-making. So what is their balance sheet strength? You can see total assets, mainly they maintain flat, around 300 plus million. That means that they are not building new plants for the past 3 years, but I think they consolidated their production. Previously, they have 2 sites, one in Teluk Panglima Garang and one in Johor. So they closed the one in Teluk Panglima Garang and then they shift their operations to Johor. So now all centralized in Johor. Liabilities flat, around 100 plus, 130 million plus million ringgit. Debt manageable, 84 to 85, 95, that kind of region. And then total equity has been steadily increasing because company got earn money, then the retained earnings will be part of the total equity. Cash, surprisingly, quite on the low side, around 4.87 million. And if you take 4.87 million versus the total debt, you know that cash on hand can definitely not pay the total debt. It's not a net cash company lah. So maybe Chun Beng, after maybe doing so many weeks against tech companies in Malaysia, which maybe have 30% of their assets denominated in cash versus this kind of company, any comparisons or thoughts that you want to share?
No, I think for them it's still okay, because ultimately the debt against the asset is still not very, very bad in my opinion. But of course, this is manufacturing company, is how you manage the cash flow, how you leverage on the financial institution to keep your company growing. If you tell me that if you are running a factories and then you don't have any debt, then maybe I would say you are not leveraging enough, or you are not smart enough in expansion. So I think this is quite typical. As long as the gearing or whatnot is manageable, if things happen, of course you will be able to survive it through. But of course, when you see cash is like 4 out of don't know how many when you compare to debt, it's like very worrying. But all these guys revenue is increasing slowly. Profit margins stay around the same. Of course, they did a good job in consolidation of their factory to lower down the cost, but then the one is on the side note. But the rest all is sort of remain the same. Remain the same means what? Means it's predictable. And
if
this thing is predictable, you can get loan. And
correct.
You can serve the loan easily. So imagine you are an employee, get fixed income every month, and then with the hope to get some bonus or increment in the next year, you can get loan easily. Maybe you're making about 3,000 to 4,000 per month, you still can get loan. But then if you are doing you're the gig worker for example, you do freelancing, 1 month 5,000, another month 0, another month 10,000. Maybe in total you are earning more than the normal employed kind of stuff, but you can't get loan because it's inconsistent. So it's quite similar to this manufacturing company, factory based. As long as everything is predictable, the cash flow is enough to pay for the interest or repay back some of the debt on a monthly or yearly basis. It's all good in my opinion.
Yep. Very good point. So for those who have been following us for the past few weeks, you cannot compare SCGM's business model and balance sheet against other more sexy looking one, because different business model, they will not have the same kind of justification or managing their balance sheet the same way. Just like previously, maybe you have also listened to what we talked about before. Those predictable business, they can really afford to take up more debt because there is a surety or more consistent basis that the upcoming months they will generate money, and then the bank is confident that this money will be used to repay them. So just because the cash portion looks small and the debt looks too big, don't think that the company is not in good shape. Ultimately, they can generate enough money to pay back. It's all good. So next we look at the cash flow statement. You can see that the operating cash flow, 2018 it was around 10 million, then 2019 it got down because 2019 was not a good year for SCGM Bhd. But in 2020 it shot to 28.7 million. So also a huge jump in terms of their operating cash flow. Investing, you can see that in 2018, huge sum, negative 56.88. Then you go invest, but your asset never grow because we talk about it just last slide. They never built new factory. They consolidated or they moved their previous existing facilities in Teluk Panglima Garang, and then they consolidate all together in Johor now. So you can see that incurred there, but that doesn't cause a huge increase in their assets. Financing, pretty much stable. Basically, they pay out dividends, and then every now and then they will also do the necessary loan to facilitate the business running. So 2018, 2019, you might see that there is no free cash flow, but as of 2020, at least things are looking to look better for SCGM. It is running more efficient now. Everything consolidated at one place. Raw material cost is better compared to 2019, and that's why the profits, the balance sheet, and also the cash flow statement gave a very good results back in 2020 lah. And of course, 2021 quarter one is already considered 25% good job done, where SCGM continue to outperform the upcoming 3 quarters to maybe give a sustainable, improved 2021 results. So you look at the top shareholders, the Lee family is the major shareholders. Collectively, they owned, I think, 15.9%. Together, they are holding it via their investment vehicle company, SCGM Lee SCGM Bhd. Sizable amount. I think there are also other fund houses holding and investing in this company, so not too worrying. And you look at their pay, they roughly pay themselves 5 million for the total, for 4%, so it's around 1 million plus each. Normal lah for this kind of companies and practice if you are in a listed company in Bursa Malaysia. Jumbe, anything you want to add on?
No, I think if you guys are following us, you should know why we cover the top shareholders or the directors' remunerations. Is because we wanted to make sure you are investing into some company that has skin in the game lah. So this guy will feel pain if the thing drop, or else they will work hard lah. This is just some precaution step that we usually take when we analyze a company. But of course, you cannot compare the same with Maybank or Cashflow or whatnot, because Cashflow is another type of the thing. They got another company that own majorities. Then with this structure, usually you can assure with high value of dividends. This is our observation. It's always true, because you need to pay back to the mother company on a yearly basis. So if your dividend share, as in your dividend investor, then this is a good place to reap all the dividend from those stocks. I think we can move on to the next slide.
So I think we talk about how competitive the plastic packaging industry is. Of course, we also mentioned just now, plastic packaging is quite a norm in the food products. But if you zoom in deeper, actually there are a lot of kinds of plastic packaging. And for a company like SCGM, they mainly do the thermoform vacuum plastic. So the plastic tray inside your JuJuR biscuits, and then your mooncake packaging, your egg, you buy eggs, those that come with 10 eggs in, or half a dozen. Those hard plastic PET packaging also is manufactured by companies like SCGM. But you also have plastic bottles, which is not manufactured by SCGM. Laminates basically is a kind of packaging where it's plastic, but it's not 100% plastic. Like your Milo soft pack, your milk powder soft pack, what else? Those kind of plastic laminates, they are not produced by SCGM. Those are produced by companies like Daibochi, what else? Syntex also. So plastic film and hard rigid plastic, totally different kind of machine setup and different kind of technology. So if you just compare and zoom into those kind of rigid plastic trays, you have companies like Guan Heng Plastic, SCGM Bhd company, and also Denons. But I don't think Denons produce for food. They produce for other kinds of industry players. So, but that doesn't mean they cannot compete if they both have the same technology and produce the same kind of rigid plastic products. So it is competitive, and I believe there are other SCGM Bhd companies out there who also produce rigid plastic packaging. So prospects. I think we're going to bounce back to the questions that Chun Beng asked just now. Do you see SGM as a company that will grow more if humans like you and me rely more on food delivery services, or it will become a PPE player? I mean, maybe if you are in the chat now, you can let us know. Do you think SCGM will say to become a major food and packaging supplier or become a PPE player 5 years, 10 years down the road? You can let us know your comment. But I think Chun Beng and me, we are quite strongly agree that if food and beverage packaging will still play a major role in SCGM's business in the coming years. It's quite difficult to get 4 million kind of revenue should jump straight to 200 million in a blink of an eye and surpass their core business currently lah. Chun Beng, anything you want to add on?
Can move on. Can move on, yeah.
So I think this is one of the points that you said just now in early. I think maybe you can reinforce your point of view on how SCGM runs their business.
It's a long one, but I think this is some of the key message shared by this is the directors.
Yep, this is the director.
Founders, right?
Yep.
Because I always get confused because all of them start with Lee. I don't know which Lee is which guys lah. So I think they are saying one of the key point they are saying is they need to do some sort of consolidation or be smart in their manufacturing so that they can manage the cost. And this is the biggest thing they are trying to put their effort in, because ultimately competition will be strong, and there will be some time they need to slice their profit margin just to retain the market share. So they has been very focused on doing this, and this has drew some result in 2020. But of course, I think one of the comment also make a point that their companies sort of not operating during MCO lockdown, which is true. But then I think that the time alone it's not going to be a big stopper because typically these guys will have stocks, and then maybe you can see just the inventory efficiency level will grow for this 2020, but then in the future you back to the normal on how they are managing their inventory. It just, you see, this year the inventory efficiency is high. I manufactured 5, I sold 5, but maybe only true for 2020. It will go back to the normal track. So I think March and April impact in terms of not using their capacity, but then I don't think it impact the business, because they should have more than enough inventory to support just for 1 to 2 months.
Yep.
Anything to add before we go into the risk?
Yep. So I think we just want to echo. You can see what he said. This is from The Edge. When The Edge interviewed him, they say, yep, we can increase our prices and register higher profit, but that will only benefit our competitors. Because when you sell expensive, definitely someone will come and sell cheaper, and then there goes your market share. So this is not in mind of their strategy. So you cannot expect a plastic packaging manufacturer like SCGM to register 20%, 30% net profit margin. Because if they register this kind of profit margin, definitely someone with the money will come in and set up a new plant and compete with them. So to eliminate competition or to make competition negligible, minimal, they cannot sell too expensive because it's a strategy. So you cannot, this company has to grow by quantity and not by quality. So you have to take note, if you want to invest in a company like SCGM, this is their strategy. You cannot blame them to sell cheap plastic packaging. If they don't sell it cheap, they will be out of competition. So last but not least, good prospects always comes with risks. And of course, one of the risks that we highlighted, as always, is competition. It's not very difficult to set up a plastic packaging company. That's why I think we have a lot of them, just that they don't plan to list and they just remain as SCGM Bhd. And another point we also just touch also is plastic is a petroleum derivative. Crude oil definitely will impact the resin prices. The resin is a finished component that plastic companies use to make their final product. So if crude price goes up, resin price goes up, and then they don't want to sell cheap to maintain market share, then that's where you have a situation where the company might report loss-making quarters or even fiscal years. So it's inherent in the business. You cannot escape. So before we answer your questions, we round it off with the final part, valuation of the company. EPS latest cumulative 12 months is 12.06 cents. PE ratio 25. ROE decent. 13.22% is quite decent. Net profit margin trailing 12 months is 11%. Also good. Not sexy, but good. There is a growth in your revenue. Dividend cent per share is around 3 cents, and then based on today's price closing, you get around 1% dividend yield. And they have a dividend policy. That means every time they earn how much, 40% gets paid out as a dividend. Price to book, 3 times, not too expensive. As a total, as a whole, what are your views and comments, Bing?
I offer something like, if you go and check their profit margin on a year-to-year or annually basis, it used to be 14, 15 back in 2015 or 2016. Then it slowly dropped until the lowest, which is last year, and this year it bounced back up. And then if you go and observe the share price, somehow it behaves the same. In a way, very, very close. The last 2 years was the bad years for SCGM in terms of share price. But of course, if you need to compare it to a lot of factors, but if you just purely relate their profit margin versus their share price, is kind of aligned. What does this mean is, if you are sensitive enough to try to put your bet in plastic or company that have capability to ride on COVID-19, which is the face shield, face mask or whatnot, then you must make a lot of money because SCGM. But now, if you realize it now, then maybe now it's about the high side already. Maybe it's not very, very expensive yet, but still relatively high, in my opinion, because you see P ratio 24, 25, while if I'm not mistaken, Facebook also around this range or slightly higher. Think of it this way. Or you think of Maybank or CMB, which is lower than this. So this is the thing you need to take note. It has evolved quite a bit in terms of share price in the last 6 months. And in my opinion, their profit margin is already there, unless they manage to spin off new type of product, which is something like face shield, give them high margin. But you can see they do that also contribute not even only few percent of the entire revenue. So this is all the things you need to take note. For me, overall, this is a company will have it won't have the impact. It will have ups and down. And in my opinion, they just go through the down and come back up. Whether you want to go in now or not, it really depends. In my opinion, you should try to look for the next round when it go down again. Then maybe you can take a look or take closer look on it before you invest. But for now, definitely it's already rebounds. Imagine the bounce rate go up, not bounce rate, the high up rate is quite close to all the technology company. You will think this is quite crazy for company that have traditional model.
So I think that's a very good point. Not to say it's expensive now, but I think if the company were to not perform, the downside is definitely more than the current. And then the company now is already reflecting the 2020 better results compared to 2019. If you have followed SCGM for the past, I think 1 year, the share price definitely has gone up. Definitely has gone up. And after they released their latest 2021 quarter results just lately, you see the price have come down again because people have started to sell on news already. These are the people who have invested the share maybe 6 months ago or even 1 year ago. So not to say food packaging, plastic packaging will always become a component in your life. As of currently, I still cannot see a substitute to plastic cheap enough, safe enough, and then environmental is another question. So, but I mean, it's still a very good company to KIV. See whether the company has come up with new products that they can really put the price there and people have to accept the price. But for us now, major source is still coming from plastic packaging to food and beverage business. They really cannot, cannot put a high price and then dictate the profit margin lah. So we end our presentation. That's about it. We will chit chat, see any questions that you guys left in the comment, and hopefully we can end early. And as promised, you can go and enjoy your Mid-Autumn celebration.
So I think is this one of the questions. Will the revenue be affected by currency? I think the answer is yes lah. The direct answer is yes. And beside currency, is more of the crude oil price also might hike them. Not the transaction currency itself, but the crude oil price, which play a major role in plastic manufacturing. So this is one of the things. I think this one is I already sort of respond just now. Yes, definitely got impacted, but I believe they are somewhat close to the essential services. They are the one of the few guys that they get to resume their operation in the earlier stage. But of course, in my opinion, this will only impact their inventories storage, which you might see a very efficient inventory turnover this year. But then it shouldn't impact because of this lockdown. They didn't produce enough to support the sales. I don't think so, in my opinion. But of course, you can revalidate our statement by going through the annual report. And then I think the next one, probably you can take this.
JWW. Okay, this is nothing to do with but we also can answer this kind of question. You can ask us anything. So what is the difference between stock split and bonus issue for shareholder? Bonus issue move between earnings to share capital. Does it really impact investors? Not really. You know why you don't impact your share capital? Because you get free shares, ma. So stock split is originally you have, let's say you imagine a share as one mooncake. Stock split, I take your mooncake, I break your mooncake into half. Technically, you have 2 pieces of mooncake, but that 2 pieces of mooncake is split from the original mooncake. So that is stock split. Bonus issue, you move your retained earnings to your share capital. It's just an adjustment within the statement of equity. And what is the effect to you? Because it moves to your share capital, the company instead pay out the retained earnings as dividend. They give you share. So in a way, they are forcing you, or maybe you don't know, instead of giving you the cash, they take the cash, they put in the capital, and then they give you free share. So maybe bonus 1-to-1, now you have 2 mooncake, but everyone has more mooncake. So the mooncake value also will drop. Your EPS per share in the future also will drop because now you have more mooncake around the public already. So I hope I answered your question. Stock split, you break your 1 mooncake into 2. Bonus issue, company give you new mooncake. So you have 2 big mooncake now. But the value of the mooncake may not be the same. Hope I answered your question easily enough.
But nevertheless, we will share the one of the link into the comment, because we used to compare bonus share versus share split lah. We try to point that out in a not graphic, in a table manners. Maybe you can refer that. There's a clearer explanation over that post.
Yep. So I think, yeah. Next question. I think there is some agenda on management as instead of clear your debt, but SCGM still pay dividend. Frankly speaking, I would save the cash and lower the debt and expand the business. Fair point. I think who doesn't want to invest and build the business bigger? I think the current capacity of SCGM, once they consolidate their 2 plants into 1 plant, they manage to increase their efficiency, and then I think the current plant that they merge together will definitely have more potential to grow. But as said, it's a very competitive business nature. You want to grow, SCGM wants to grow, competitors also want to grow, and it's like how they want to grow, they will play in terms of the price. You can sell 1 ringgit, I sell 90 cents. And food manufacturers, wow, 1 tray I save 10 cents, 100 tray, I'll save more money already. So that's how the economies of scale play into a picture. So it's a very competitive business, not easily grow just by throwing money and building new plants.
Okay, I think thanks for this comment also lah. I suspect this as well because like I used to read, right? They are why your soft drinks is in square manners, those boxes is easier for transport, and also some also share then why your Hunger Plus in aluminum tins, right, is circles. They also come with some explanation, but I forgot why really. I think mainly because for transportation is always the main reason for them to design in such a way, or easy for arrangement of packaging. This is always the top 2 reason. Thirdly, it's only maybe this can retain the freshness of the thing, but this is always the less priority. So about transportation and arrangement of the products. But thanks for that anyway. You want to share a little bit about Tiguan and
I never really, honestly speaking, I also never really looked at SCGM just because quite famous stock. I think a lot of other financial KOLs have been talking about it. And so ngam is Mooncake Festival, and this company got mooncake packaging. So we just scheduled this as a special mid-autumn series. I never looked into Tiguan and SLP before, so I cannot answer your question. But maybe I will read it up, and in the future, if you are still interested, we can make a special episode. But I think Tiguan business model is more, they do more than plastic packaging. They also do other businesses as well. So in terms of diversification, maybe they are better in that sense. So yeah, I don't see any questions anymore. We have left the link down there to learn more on bonus issue and share split. Since like someone pasted it up, you can go back to the link and which we pin in the comment section, and you can revise yourself also if you have forgot the difference between bonus share and share split. In the end of the day, both will definitely help in terms of liquidity because there will be more outstanding shares in the market, but one actually provides more benefit, which I think bonus share actually provides more benefits to companies and also to shareholders. They get to keep the cash, the retained earnings, they convert it into share capital, and then the money, the cash on hand, they can use to grow the company. And for shareholders, I have more shares, I can maybe partially sell it off if the price is right, rather than I hold everything on my hand. So nevertheless, I think we still finish by 10 p.m. But then again, we really thank you guys. You should now be playing Langton, eating mooncake, but we still appreciate your 1 hour time spent with us today. So we will not further delay your plans. Happy Mid-Autumn Festivals, but do catch us same time, same period also next week, Thursday, 9 p.m. 中秋节快乐, and stay safe and enjoy the rest of your night. See you soon. Bye bye.